Hey guys, this is Kurt and I'm gonna be breaking down the stages of buying and the stages of selling. It's very important to have an entry and an exit point before you get into any trade or any long-term stock pick. All right, so remember, never stop learning. Be the change you're looking for. At the end of the day, a lot of people do not understand the qualities that they have would affect them in trading or investing long term. So let's get right into it. All right, so we got the four stages of price movement. We got stage one, stage two, stage three, and stage four, and then it repeats the cycle. The first stage is sellers are losing power, so that means it's trading sideways. So stage one is the stage where you want to get in, which is I like to call it the bottom. So as it moves to stage two, this is the best time to buy in. Remember, follow the trend. Don't go against the trend. Because if you go against the trend, it will put you in position to lose your wealth, lose some profits, and put you in a bad position. And stage two is actually the stage where you stack or add more contracts or buy more shares because it's in an uptrend. And when it's in an uptrend, is the best time to take advantage of everything that you got going on. So when you're in an uptrend, just stack, add more contracts. All right, when we get to stage three, this is the distribution, right? It feels and it looks like stage one, right? Because it's trading sideways. You don't know who is overtaking who, the buyers or the sellers. So stage three is kind of a tricky stage. You want to be able to stay in. You want to be able to watch your profits. If you have a stop loss, if you have a percentage that you want to take or a dollar amount, you can take it this stage. But stage three is marked by stage four. So stage four is the fall of the stock price. So sell now, lock in profits, right? Because this is stage four. Once stage four hits the decline, it's going to be very, very hard for you to take profits and end out on top because stage four eventually turns back into stage one. So once again, stage one is the stage where it's trading sideways. So when you start seeing it in an uptrend in stage two, this is the best time to buy. This is the best time to stack your contracts because it's in an uptrend. And it will put you in position to be able to build up wealth and build up profit as it builds. Stage three is the distribution stage. It's trading sideways, so it looks like stage one, right? So this is at the point where you make a decision. Do you want to take profits now? Do you want to stay in and see if the trend is going to continue to go up or the trend is going to reverse? Once it hits stage four and it decline, you need to be taking profits. You need to be selling off, putting yourself in position to take profits because you don't want to hit stage one, right? Stage one is a no-no. All right, it resets itself. All right, so a trend, remember, a trend is the overall direction of the market or asset or price. In technical analysis, a trend are identified by trend line or price action that highlights the price marked by new highs or marked by new lows. So if it's new highs, it's basically telling you that it's in an uptrend. If it's new lows, it's telling you it's in a downtrend. So if you're putting in a call, you want to have newer highs, right? If you put in a put, you want to have new lows, right? Because there's new lows, you put in the put, you make money as it declines, right? And note to self, never go against the trend, never go against the grain, right? If you don't feel comfortable taking the trade, don't take the trade. But don't go against the grain, don't go against the trend. That's how you get burned. All right, so basic trading tools. Number one, 5-day exponential moving average. Remember, exponential moving average gives weight to the current data, so it's very accurate. 10-day exponential moving average is the same. It's just 5 days that's compound on top of that. So you got 2 trading weeks because each week is 5 days of trading. Then you have 20-day simple moving average, which gives weight to the closing price from the previous day, right? So as the days go by, the days drop off, new days get added on. And RSI, one of my favorite indicators, relative strength index, set it to 14, which is the normal setting. It gives you a 14-day period, and then you can measure the strength of the stock. Number 5 is support and resistance. Know your zones. So remember, when you have resistance, this is the level that it reaches and it never goes above. So that's the resistance and they get rejected, right? On different time frames, you want to check the 1, the 3, the 5, the 15, the 30, the 1 hour. It depends on how long you trade. You swing and scalping or day trading. All right, number 6, instead of the MACD, I like to use the ADX and DI. Well, it helps me. It lets me know the trend and the strength of the trend, right? Anything from 0 to 25 is a mild trend. 25 to 50 is a stronger trend. And as you go 75 to 100, is very, very strong. So it'll let you know what direction is heading. Negative or positive, put a call. All right, so technical indicators, as you all guys know, they delayed, but technical indicators are good tools to have in your tool bag to put you in position to be able to predict the future and put yourself in position to make profits, no matter which direction the economy goes in. So remember, technical indicators are mathematical calculation based off the price, volume, or the open interest of a security of a contract used by a trader, which follow technical analysis. By analyzing the historical data, it actually puts you in position to be able to somewhat predict the future price movement. So take advantage of these indicators out there, as many of them. It'll put you in position to be successful. It'll put you in position to understand that, hey, I can learn something new every day and I can put a new tool in my toolbox because you never know when I might need it. All right, so exit and entry points, always have an exit. Do not go into a trade, do not go into investing blindly, have an exit, right? If you're gonna invest $1,000, hey, my exit is 25%, so you already know at $250, you was exiting a position no matter what. Right, don't be greedy, you're gonna get burned. You can set a dollar amount or you can set a percentage, but do not be greedy. Put yourself in position to walk away on top. Don't walk away and say, hey, I had $1,000 profit and I lost it all. Why? You don't have to lose it. You can take smaller bags and compound them smaller bags over time and then put you in position to be successful. Remember, we team take profits, we team take small bags, we team learning knowledge daily. There's so much knowledge out there in the world. The basic knowledge will propel you to put you on top and put you in position to be successful. I'm here to help you. I'm here to show you what I know. I'm here to teach you new things daily. All right, so we're gonna get into charting a few of these things and letting ourselves know how important it is. All right, so we're gonna stop sharing. We're gonna pull up a few other screens and we're gonna learn some new things today. And it's gonna be beneficial to us, which is very enjoyable when you learn the different things, especially if the different things can benefit you long term. All right, so we're gonna pull up stockcharts.com and we're gonna roll. All right, so I'm gonna share my screen with you, ladies and gentlemen, and I'll get to it. All right, so you guys know stockcharts.com is one of my favorite tools to use. Like I said, you gotta have tools in your toolbox. You gotta understand the tools that you're using. All right, for example, we're gonna do mRNA, Moderna. We all know Moderna is one of the leading candidates that's actually vaccinating and inoculating people. We just wanna look at trends and we wanna understand what we're looking at. So I wanna put it on a daily. And once again, we want to be able to chart it, understand what are we doing. Remember, we got highs, RSIs is over 70. All right, we got some lows, which is some buy-in points, right? As you know, the high 497, 49, and then we had a low over here, which was 54. All right, so when we're looking at these lows, ladies and gentlemen, we want to be able to understand this is the best opportunity to buy in. So we have stage one, we have the run up, stage two, all the way up, we stacking. This is stage three, it's trading sideways. And then we have stage four, which is decline. Hopefully you got out, hopefully you read your RSI, hopefully you read your indicators and momentum. Then you looked at the volume, because remember, the low point as it increased from 65 to 78 is telling you it's time to sell off. And if you didn't sell off at 178, eventually it went down to 102. Once again, we have stage one, which is the buy in. Stage two is the run up, we stacking. Stage three is traded sideways just a little, then it had a stage four decline. right? So these are all the signs and all the movement that you can calculate on basic using the basic indicators. Right now, if you want to separate it by using lines and all of that, this is how we can do that. All right. So let's say we got our support here, here, then we have our resistance. So you already know you had ample amount of opportunities to buy in. Right, from 214 all the way to 497, that's a hell of a run. So now we're going to change it and put it on weekly so we can see the run up and how long it took. So these things is very important that you change your time frames, weekly, monthly, hour, daily, 15 minutes. And as you can see, it's heading into a nice uptrend. It was oversold 497, 49. It got rejected, dropped all the way down to 385, right? Perfect time to put a put in, right? Because you know, once something is oversold, eventually it's going to drop. All right, so we got, look at these week run ups. Look at that. All right, strictly uptrend. Nothing is stopping it, right? Nothing is in its way. All right, so we're gonna get on ahead of time. We're gonna get on some weekly picks. One of my weekly picks for this week is Best Buy, BBY. So we got to understand the capacity of stocks, and we got to understand the bottoms. We got to understand the highs. We got to understand the lows, and we got to understand our exit point. Right, we got a double bottom. Right, confirm buy-ins, and then we have a bottom. Right, buy-in. Once again, stage one, stage two is the incline, stage three is trading sideways, and then stage four is the decline. Right, look at this W. All right, double bottom. Then we had what? A bullish run. All right, so when you're looking at this, look at this, double bottom. All right, we're gonna label that DB, call out, double bottom. And then we just strictly over here, we just have a bottom, right? Once it bottom out, RSI is telling you to do what? Buy in at 94, right? If you look at the previous high, we got our support levels. All right, look at our support levels. It broke it many times, right? Boom, boom. All right, hit one. It seemed like it hits 121, 48, 121, 78, 122, 21, and they get rejected. And then remember, it had a what? A high point of 127, 78, and then that got rejected, right? So once that got rejected, you already know that it topped out the RSI. It was going to be a decline. So it went from 127, 78 all the way down to 114.96, 111.85. And then when we're looking at our moving averages, we have 200-day moving average, which is the purple line, which is 112.21, right? Anytime it breaches that 112.21, look at all these entry points. There's no excuse not to get in and take advantage. It's below the 200-day moving average, right? The 50-day moving average is 112.61, right? So it breached that right here, which is its current price. So that will actually tell you it's a great position to get in and to buy. And look at the previous history, 119, 116, 127, 122, 121. So remember, when you get in, you should have an exit. My first exit, if I get in at 111.25, my first exit is 114. My next exit is 116. My last exit is 122, right? I already picked my exits, right? Because if I don't have an exit in place, I'm gonna just be trading blindly. I'm just looking forward to hit a high point, and what if it hit a point and then it reverses? And I lose all my profits and my proceeds that I was investing, right? So we're not going to be greedy. We're going to have exits. We're going to have entry points. All right, so next weekly pick is DLTR. and I'm pretty sure everybody is familiar with that, which is Dollar Tree, right? Home of the super dollar. Everything that you can get in there as a dollar. I wouldn't say it's the highest quality grade of material and products, but it get the job done, right? So when you go into the dollar store, you looking to do what? Get products fast, get products at a cheap price, so you can be able to leave and be able to go home and enjoy yourself. So when we're looking at this, once again, we want to look at these high points. Top, RSI, 120 telling you to sell. Once again, look at this area. All right. We got a bottom here at 95. We got a bottom at 97, 97 again, right? It keep appearing. So it's actually below the 200-day moving average, which is 105.81. So 101.12 is actually a good point to buy in for long term. It's actually a good point to get in for calls and ride the momentum. RSI 55 is pretty low, but some of your best entry points came in when the RSI told you to in June. Just in August, a week or two ago. So it was many opportunities to get in and take advantage. A lot of people don't want to take advantage because a lot of people don't want to do homework. These are quality companies because guess what? We use these companies. These companies is going to be used. And we know that. So we want to be able to take advantage of these companies because the products is flying off the shelves. I shop there. I'm pretty sure 9 times out of 10, you guys shop there for small things, pans, maybe need to grab some silverware, anything like that, napkins, books, coloring pencils. It's many products that you can buy that actually Dollar Tree supply. So remember, we got our levels, we got our support, we got our resistance. All right, have you noticed? It hits the 120 range and rejected, but it hit the 112, 114, 114, 115. Then you have a rejection. Like I said, you have inverted shoulders and head. So that's a sign of reversal of an uptrend. Once again, we got stage 1, stage 2, it ran up, stage 3, it traded sideways, and then stage 4. Right, so if you got in at 95, you went all the way up to 110, that's a $15 increase if you're doing calls, a $15 increase if you own the shares. So take advantage of the knowledge and take advantage of everything that's out there so you can be able to be the best trader and investor that you can be. Remember, everybody trade with different amounts of money and different amounts of knowledge, but if you master how you trade, you'll be successful. You'll be better off. So now if I want to confirm things, I go to another platform called TradingView, right? And on TradingView, I use a different setup. And then I use on stockcharts.com, I use a strat, which to me is very beneficial. And I use it combined with the Heikin-Ashi candlesticks, which gives me a full trend and let me know direction that it's heading into. And now I understand what I need to do. So as you look on this chart, you want to type in Moderna. Because Moderna has been really hot. And we're going to look at it on multiple time frames so you can get an understanding on what you're looking at. All right, so we got Moderna. Let's say we got Moderna on the 1 minute and we want to scalp, right? 1 minute is very important. Each candlestick represents 1 minute, right? So I see no solid blueprint or no solid entry point for me to get in. So I want to look at it on a 3 minute, right? And then see how it looks and see if I can calculate the situation totally different before I enter. Boom, there we have it. So we on a 3 minute. What I like to do when I get to the 3 minute, remember, if you experienced trader, boom, boom, 2 candlesticks. To me personally, even though it's buyers and sellers, I would still would have waited and got in on the 3rd candlestick. As you can see, the price was 395.18. Then it went to 390 for 400. So I could sell here, or I could have sold here at 399. right? Because look, the downtrend was forming. So that's a quick scalp. Got in here, sold at the top, made profits, put myself in position to be successful, and I exit the trade. There's no point in me staying there now if I'm not swinging it or if I'm not day trading it, right? I'm gonna get my profits, I'm gonna exit, right? So then we want to look at it on a 5-minute, right? Once again, as you can see, the 5-minute would have showed us love. It would have put us in position to be able to get in on our points. All right, entry. We could have exited here, or we could have exited here. Because remember, you got in here, so nowhere along the point that the price dipped below where you got in. And that's what it's all about. You got in here. This is your line. Stock is still at a high point. You could have made profit. It's all about making profit. So when you're trading or you're investing, the whole thing is on options, you buying time and you're looking to make profits. So if you got profits, no matter how small or big it is, it's best to leave out on top, right? So let's look at the 15-minute time frame, right? So this is more so if I want to swing trade, I want to be able to look and see what kind of trend we had into. Looks good, look pretty good. The 30-minute, let's see how the 30-minute look. Not bad, it's headed to an uptrend. And then I say, hey, you know, let me look how the 45-minute looks. Not bad, it's headed to an uptrend, right? So now let's say stock like, let's say, Apple. A lot of people like to trade Apple. All right, you want to look at all these stocks on different time frames so you can get the best position as possible. Right, when Apple loads up, there we go. All right, so we got Apple on the 1-minute time frame. Let's say we scalping. We want to see how Apple look. It's in straight. You could tell that Apple it was on the downtrend in the 1-minute. So we're gonna get our confirmation. We got 1, 2. Let's say we enter here. 1, 2, 3. We enter here. All right, and let's say money wise, let's say we got in, and let's say it's 147.62, right? And then we rolled it all the way down to 136.21. So if you have multiple contracts and your delta is $50 or $100, and it went down $1, each contract that you have is $100 for every dollar that it declined. So if you got 10 contract, that's 1,000. If you got 20, that's 2,000. 30, that's 3,000. On and on and on, right? Don't think that these contracts not adding up is not putting you in a position to be successful and make the best profits as possible, right? So if you're going to get contracts, make sure you get contract and make it worth your while. Don't be afraid to get in there and risk a little. Remember, every trade is not going to be successful, but if you can get 7 out of 10 trades, that's 70%. And to me, that's a C any day. All right, so that lets you know that you somewhat of an okay trader. Don't be afraid to make these decisions. Don't be afraid to look at it on different time frames, right? So once again, I want to look at Apple on a 45-minute time frame and see how it is, right? Still in the downtrend, right? Take advantage of this, all right? So another stock before we get out of here, ladies and gentlemen, is I want to look at Zoom. Zoom is actually below the 200-day moving average, 50-day moving average, 100-day moving average. Zoom is at the bottom. So I want to look at Zoom on a weekly because I want to swing it. A big company like this, I like to swing it. I like to swing it 2 to 4 weeks, a little bit longer. As you can see, over the last few weeks, as you can see, look, Zoom have dropped. Had a little uptrend from May 17th all the way to July 6th. So if you would have got in here for long-term 306, you was able to take it to 4 or 5, almost $100 a share profits. So these are the things that you look at now. If you want to look at it on a monthly, it looks totally different. You could look at it from last year. It was in a straight crazy uptrend. So look at this, $78, $73, and then went all the way up to what? $586. So $500 profit per share. right? Last year was a great time for people to option trade, great time for people to buy quality companies at a lower price. Because remember, with the pandemic, Zoom picked up because it's no interaction with each other. So you can FaceTime, you can communicate, you can talk, and you can protect yourself from COVID-19 and many other things that was going on to transpire in the world. You can connect with your family. So Zoom was one of those companies that it took off and it was major. And I think Zoom is going to be around to stay because a lot of people enjoy the platform and they like to use it. So this is our video for today, ladies and gentlemen. Happy to be back talking to you guys. The family is safe. Let's take advantage. Let's keep building wealth. Let's keep building knowledge, and let's keep putting these ourselves and our family members and other people in position to be successful and take advantage of what's going on in the world. Because even if you invest in the stock market directly or indirectly, it's going to affect you. Repeat that to yourself. If you invest in or not, the stock market is going to affect you. Because everything that we deal with, eat, sleep, share, use is sold on the stock market. It's under some kind of company, private or public. So let's take advantage. And I hope you guys have a blessed day. And I hope you guys have a blessed night. And let's keep on building.